Hello, everybody. How are we doing? Good morning, everybody. Let's just see. Okay. Everything seems to be working, I think. How is everybody doing on this cold Monday morning? We'll see if we can hopefully get some trades. I guess we'll see. We will see. I'm very well, thank you. And in a minute, I will break down the previous week's return and progress on the E8 challenge account, because you guys know that I've been trading that over the past couple of weeks, and I didn't do any streams last week, so it would be good to obviously get a give you guys an update on that. Yes, 90k subs. Need to get 100 though. Need to get 100k. That is the goal. But yeah, this is the account so far. You can see that last week we had a good week here. If we go into the dashboard to see it properly, you can see that we're only basically halfway towards the target. It's annoying being halfway and only 7.4% in profit, but you know that's fine. But you'll see the drawdown now is at $98,530. So that's the level we can't go below now. So we're obviously up 7.3%, and the highest point on the account was here at 8,580. So it's just gone $10,000 below that. So yeah. So we basically now, from where we are now, have a 9% drawdown. We have a 9% drawdown, and we have to make 7.5%, which it's okay, but you know, some of the trades I've actually taken, we have used slightly increased risk. And when you have a drawdown that is basically catching up with you, and then if you have a few losing trades, it can be very annoying. That's just the easiest way to put it. Because if your drawdown is the same, and let's say you go 7k into profit, and your drawdown remains the same at that static 90k, then I would have a 17% buffer right now. But instead, my buffer is only 9%, which isn't really that good, you know, in comparison. So, but yeah, the trades we took, very nice. We had a 6k win, a 6k win. This trade here, this $950 trade was actually a buy to then sell. So I was looking to sell from a certain level, so I bought up to that level to then enter the sell. So that was quite a good day, and it just meant that I was able to maximize the profits on that trade. You trade prop firms only? I do not only trade prop firms. I don't think anybody should only trade prop firms, because you're literally putting all your eggs in one basket, and a basket that has been known to fall and drop all the eggs, basically. So you don't want to just trade with prop firms, because you're living, very close to the edge if you're doing that. And this week, if we look at the news to see how crazy this week's going to be. So if we look today, we have an ECB speech at 4 p.m. And just remember, you need to be checking the calendar, and you also need to be checking the calendar for your specific firm you're trading with. So you can go on here to the E8 one when you're actually looking at trading to see if there is any high impact news. So you can see there's a medium, there's 2 high impact news events here, which is tomorrow, which we can also see here on FX Street. FX Street is the one I usually use. If I'm in a trade on a prop firm or I'm looking to trade on a prop firm, I'll always double check, because you don't want to be caught out that the prop firm you're trading with classes it's high impact, but FX Street doesn't, or Forex Factory doesn't. You want to make sure that you get it correct. And just by adding an extra minute into your trading routine by checking on your prop firm, it will just make it a lot easier. So tomorrow we have retail sales, which means that if we are in a trade before that, then it will be a very valid reason to close that trade before 1:30. But if I'm entering trades at, let's say, 11:30, 11:45, there is a high likelihood that I could still be in a trade at 1:30. That's why, some people, they'll enter an London session and say, oh, well, I don't need to look at news because there's no news in London session. But what if that trade runs out longer past your normal trading hours? You have to be aware of what's going on after that if you are going to still be in a trade. And then Wednesday, we have NFP. NFP on Wednesday, which obviously we're supposed to have had it on Friday, which was the first Friday of the month. But unfortunately, that wasn't the case. We obviously had another government shutdown, which meant that we are getting it on Wednesday. So if you guys want to see it, perhaps I could do one of those live streams where I trade a small account just for fun on NFP. Obviously expecting to lose the whole account, but if we make a small little gain on the account, then that would be great as well. But it's just usually a bit of fun that I usually do on NFP for a YouTube video. Perhaps I could do it live instead. It would be quite a funny bit of trading. But again, another day where a trade could run through and we'd have to close it early. And then you look the next day, Thursday, we have more news, more high impact news, GDP news for the pound at 7 a.m., which means that most likely there will be a situation where we wake up in the morning and let's say this is my trading hours here. We'll probably have a massive candle or a few massive candles, and then we'll just probably retrace, which means it is harder for me to get entries and trades when we have news before my trading times, because you don't want to have massive moves before you're trading, because if I'm trading the break of the previous highs or lows or things like that, then it can make it very difficult, to say the least. And then we look on Friday and we have even more high impact news. We have CPI and we also have GDP for the euro. So again, it's basically every single day this week we have some sort of news. Apart from today, there's not really anything that's going to affect our trading today, but Mondays are usually quite slow for me and my trading. So we will see how it goes this week, basically. And when there's so much news packed into one small window, it can cause some chaos. And you need to be ready for that if you are trading, because you do not want to be on the wrong side of the news, especially if you're trading with prop firms. If we're just looking at high impact news here, you can see that this week we have a lot of USD high impact news. We have GBP, we have Swiss franc, but mainly USD high impact news. And as you guys know, the majority of my trading is on a USD pair, GBP USD. So yeah, it will be interesting. And I don't trade usually on fundamentals, so I'm not going to look at forecasts or anything like that. I just simply do not trade it, because in my opinion, it's better to not trade it, especially if you're intraday trading. The lot sizes, the stop loss sizes, it's just not worth it to risk the slippage. The slippage is just not worth the risk, to be honest. And that is why when I'm trading my challenge accounts or my funded accounts, then I will not hold through news. The only time that I would hold through news is if I'm swing trading. And when I'm swing trading, I'm trading on the higher time frames, the 4-hour time frame, and it just makes it a lot easier because your stop losses are a lot bigger, which means your lot sizes are lower. So let's say you get slipped 5 pips. It's not as bad if you've got a 50 pip stop loss. It's a 0.1% slippage. But if you get slipped 5 pips and you've got a 10 pip stop loss, you're losing an extra 0.5%. So it is a lot worse in that situation, which you obviously have to be aware of. So hopefully we can make some profit this week before any of that news does drop. So yeah. How was everybody's trading last week? Be sure to let me know. Because I didn't stream last week. I didn't get to hear about any trades anybody was taking or anything like that. So be sure to let me know in the chat. Did you see my Forex funds is making a comeback? Yeah, I did see the video they posted and it was quite interesting. I don't know if they'll actually start running again. I feel like there'll be quite a long way away before that even happens. They probably have a lot of different things to think about first before they open up to obviously new people making purchases or getting their payouts again. I feel like that's not going to happen anytime soon. But it would be good because they were probably the second biggest prop firm in the industry at the time. FTMO were obviously the biggest, and I feel like my Forex funds were definitely up there too. 3 out of 3 wins last week, up 5%. Very nice. Very nice. 5%. Very good week. Last week I passed my first ever challenge. Very nice. Yeah, it's always hard to pass your first challenge or get your first payout because when you do something for the first time, it's more difficult. Whereas now you know you can do it. You can do it over and over and over again. Is E8 better than FTMO? What is your view on Aqua Funded? Since the challenges are priced quite low relatively. See, price doesn't really matter that much. I've said it in countless videos. I'd rather pay more and have a higher likelihood of being paid out. The reason we trade with prop firms is to get payouts. And if we're spending $100 on a challenge, then the likelihood of us getting paid out compared to spending $500 on the same account size is probably a bit lower because you have to think about it. We're getting paid out of failed challenge fees. So if for 10 people that fail, the company's only making $1,000 versus $5,000, there's going to be a big gap in the revenue. And obviously we're being paid out with that revenue. So if more profitable traders notice the cheap deal and they go with that firm, then they're going to have a bit of an interesting situation. But I've had payouts with Aqua Funded before. I could probably find those payouts. Let me see. So yeah, I had this payout. Then I had this payout as well. I don't know if I just had 2. I can't remember if I had another one or not. But these are obviously the only 2 I could find. So we've had, yeah, just over $10,000 paid out from Aqua. And I've obviously had payouts from E8 as well. And I've also had payouts from FTMO. So I traded with all of them. And yeah, I've had good experiences with all of them. I've been paid out by all of them. Over $10,000 for all of those 3 firms you mentioned. And yeah, I feel like they're all good firms. And obviously if you can get a discount, you can obviously use code MATCH to get discounts on prop firms. And again, you don't want to go for a firm that you're not going to go with anyway. If you're going to pick the firm anyway, then you should get the discount. You should get a discount on that firm, obviously. But if you're going with a firm just because it is the cheapest in the industry without looking at everything else to do with that firm, then I don't think that's the right decision to make. because that shouldn't be the reason you're going with that firm. You should go with them because of their reputation, because of their trading conditions, because their rules fit the way that you trade, because they allow you to perhaps trade through news, or they don't have a max risk per trade. These are the things that you should be looking at when picking a firm, not just the price. Not just the price. Because that is dangerous territory. How did you find futures trading? I'd say for some people, futures trading would definitely be a better way of trading. The moves are absolutely insane. The volatility is insane compared to FX pairs. And I feel like for a lot of people that love trading with high volatile pairs, it would just be amazing. It'd be amazing. Especially if you're trading in the afternoon in the UK time. But you have to think about it. The majority of people can't trade at that time. If you're working a job, if you're having to do other things, then lunchtime, 2:30 is probably not really a good time to trade, to be honest. That's why a lot of people in the UK like trading forex pairs. They like trading in London session. Perhaps you can get the entry before you go to work, or enter on a high time frame in the morning or the evening. And you just can't really trade futures if you are only trading those hours, because you want to capture the movements at the open. And if you're not trading and being on the charts at the open, then it's going to be a bit difficult to actually capture movements if you're not on the charts when those movements are happening. Does Maven have a trailing drawdown? I don't know. I've never used them, so I can't say. But obviously here is the MetaTrader for my trades on my E8 account. So if I can go back and show you the trades, if I can find them. Okay, this one here, I hope you can see this on the stream. But this was a buy position. Very clear buy position for me. If we're looking, this was the high. We broke through the high, we then retested in, but unfortunately this one did not work, and that was the loss here that we took. I'm pretty sure that was this loss. 3.6. Perhaps not. 4th of February. Okay, that was a different loss. That was this loss here. Okay. This loss here, annoying, but again, it fit the plan, so we just took the trade. Then we moved price on to the next day. And you can see here that we had this win on this buy position, but then the sell didn't work, and then we did melt after that. So what I've been saying in the start of this stream is I've been starting buying to selling. So if I just show you an example on the charts here, let's say I was looking to short from this level, and obviously I've backtested this. I'm not just doing it randomly. If I know I'm selling from this area and I have a sell limit like this, the other way around, obviously, something like that, then I would buy up to the area. Obviously, if the risk to reward is good enough and it's a situation where it is okay to do so, then I will buy to then sell. And you can see that exact situation happen here. So I was looking to sell from this level here. We've broken to the downside. We've broken through the structure. We're looking for a retest into the structure. You see into the structure here to then go short. And we made that buy to go up to then sell. The buy worked out. We made $3,000. But then the sell didn't work out. We got wicked out here. And then we did drop to the downside and basically melted way past where the take profit would have been. So that was, again, it was good because the normal trade I would have taken would have been -1% for the day, but I actually ended up +2% for the day, which meant that it was a very good situation. And if I go back further, let me see. Okay, let's go to the second. Okay, here, another trade. You can see this one was an absolutely amazing pinpoint exit and pinpoint entry. So price broke out of the structure. This was the structure here in this point. And perhaps if I use this, it'll be easier. Okay, so this was the structure in here. We broke above, we retested. We tested deep into the structure. We got the entry in the bottom of the wick here. And then it absolutely skyrocketed to the upside. Very beautiful. Very, very beautiful. And then you see what happened after that. It absolutely melted. This was a huge drop. I think like 60, 70, 80, 90 pips, something like that. Right after hitting the take profit, which was great. And that trade made around $6,000 or just shy of $6,000. And then we can look on the 28th of February, or January even, which was the next trade. And you can see again, we had a buy to sell situation here. So I was looking to sell when price retested into this overall area here, this zone here. And when I obviously had my sell limit, I also bought up to that zone. This one wasn't as good of a risk reward as the first one or the most recent one, which was a 1-to-3. This one was unfortunately only a 1-to-1, but the profits still count. And we made $1,000 on this push up here. And I wouldn't use 2% risk on this kind of entry. I treat it the same as a scale in. So if I'm scaling into a trade, I would never increase my risk. I won't be trading with 1%, then increase my risk on the scale in. That just wouldn't really make sense to me, because the original position should be the one that has the best risk and the highest conviction, basically. This is just basically trying to improve your profits on a singular day. So this went up, amazing. I actually closed this just before we got into the entry point, and then we did wick up and then drop. And again, this was another pinpoint take profit. We went all the way down to take profit and then rallied all the way back up again, which was amazing. Another $5,860. We obviously had $100 commission, so this one should have been a bit more. This one should have been a bit more. But obviously we have commission, we have spread and everything like that. But yeah, it was a very, very good week. If we just look at last week, because actually no, it's too much effort to do that. But you can see that overall here we're now $7,000 profit, $650 commission, for a total profit of $7,390. But you also have to remember, I talk about it a lot. I don't know how many trades I've taken. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 trades, let's say, if that's correct, $650 commission. So that means for every 10 trades on average, I'm losing 0.65% in commission alone. So when you're backtesting, you need to be accounting for this. I talk about it a lot, but people don't realize on prop firms how important that actually is. Because let's say it takes me let's say I take another 10 trades, then I'm close to the 15% target. If I take the exact same 10 trades again, I would be obviously up $16,000. But that should be enough for the profit target, right? Well, no. Based on your data, okay, 16% you would have passed. Based on your normal analysis, okay, I would have passed. I would be 1% over. But the issue is, I would have then lost $1,300 in commission. So it'd actually be a 14.7K. So I would still have to take another trade, which obviously has another $50, $100 commission to even get to that point. So you actually have to make a lot more profit than the profit target because of the commission, which again, you have to think about. So this means on 100 trades, which could be a year, half a year to a year, depends. Obviously, this has been a few weeks and I've taken 10 trades. Also, over 100 trades, let's say in a year, I could lose 6.5, maybe even 10% just in commissions alone. Which, if you think about it, a 10% return in a year, 15%, 20% return in a year is a good return. So let's say you've done that and then you lose half of it just on commission alone. It is definitely brutal. That's without slippage, that's without spread or anything like that. So you definitely have to think about that when you are trading with prop firms, especially when you have profit targets, because it is a silent killer, let's just say that. And you can see this is I think it's around $5 per lot. So you can obviously do the calculation for your account size, for your lot size, to see what commission you would have, because it's definitely very important to think about. If I just remove these drawings here. And we are getting close to breaking this low now here, around 6.5 minutes left of this candle. You made $320 on your 5K Blue Guardian account. You need to make $500 to request a payout because of the consistency rule. Any advice for me? Consistency rules, they're very hard to get around. I guess the best advice is, if you have to trade for a certain amount of days, what I did in that situation when I was trading with Alpha Capital, I had to have a minimum of 5 trading days. So instead of having 1% risk, I lowered my risk massively to 0.25%, which meant that if I trade for 5 days and I lose 5 days in a row, worst case scenario, I'm down 1.25%, and that is recoverable. And obviously you want to get your payout. So the first payout, it doesn't matter the size, it doesn't matter anything like that. As you said, you want to request your payout. I would just lower risk. I'd always suggest to people to lower risk on your funded account anyway, because you've done all of that work to get to the funded account. You don't want to just blow it away by increasing your risk to try and have the biggest payout possible. That's not really what you want to do. For the average trader, that's probably not the best route to take. You're better off just going in saying, I risked 1% or 1.5, 2% on the challenge to get onto the funded stage quicker. And perhaps now you've dropped down to 0.5%, 0.25% risk on the funded account. Again, it's probably still a decent chunk of profits, especially for the amount of time put in. If you think about it, if you're putting in how many hours per trade, probably not that many. And if you're making hundreds of dollars, then it is still a good return on your time, which is what you have to think about trading. You don't want to put in 10 hours to only return $200. It's just not really worth it when you can just scale up your capital to put in 10 hours and then you make $2,000, You're at 3% on phase 1. Very nice. Very nice. It's always good to get into profit on phase 1. I feel like people struggle a lot when they go into phase 1 and get into drawdown straight away. And the reason this is difficult is because you're below that 6-figure range usually. So people trading with 100k accounts, they take a couple of trades and now at 98k, you then have to break above that 100k, which in itself is another barrier, let alone the drawdown. You have to stay obviously above profit target you have to get to. Another level is the initial balance that if you drop below, you have to then work your way up to get above that, which can be difficult. Once you build up that initial buffer, it does definitely make it a lot easier. Do you trade higher risk when you start a challenge so you can pass an evaluation faster? I definitely use increased risk to what I would use on a funded account, which is probably the easiest way to put it. If I know on a funded account I'm going to be reducing my risk, I also know in the back of my mind that I'm not being paid for any of the profits I'm making on the challenge. So any of the trades I've taken on my E8 account, as you see here, all of these $8,000, I'm getting zero. I'm getting zero because all I'm doing is trying to reach a profit target so that I can potentially get to the funded stage to withdraw some profits. So I want to be on that stage as quick as possible. I don't want to be on a stage where I'm losing money. That's just not good. So yeah, I will use 1.5 to 2% risk on my challenges now. It used to be a bit more, but prop firms have become a lot more strict in their risk allowances, which meant that you can't really do that anymore. And the one way they've actually done it is by reducing leverage. It used to be 1 to 100 usually, but now a lot of these prop firms are just dropping down to 1 to 30 leverage, which just in itself makes it more difficult to risk more. So it's basically like a hidden maximum risk, because you can't risk 4% on a trade really if you are using 1 to 30 leverage. Obviously you can do it, you just have a wide stop loss, but it's harder to do with the lower leverage that they provide. I used to have 1 hour targets and I had a nice win rate, commissions and fees. Yeah. The issue with, people that trade the lower time frames, people that are in and out of trades very quickly, you have to think about every single time you enter a trade, you're paying commission. If you win that trade, you're paying commission. If you lose, you're paying commission. If it's break even, you're paying commission. So the fees are definitely something you need to consider. The way that I look at it is like a business. If you're selling a t-shirt, you have to pay to make that t-shirt. And that's the same with trading. You have to pay to trade. You have to pay to enter a trade. So think of it as an expense for even being able to enter that trade. But you also need to take that in consideration when you're working out your overall profit. Many people just look at the normal number. They'll go on FX Replay, they'll do their back testing, they'll see 25% yearly return, they'll be like, great. But have you actually accounted for commission? Have you accounted for slippage or spread or anything like this? Probably not. So you have to add that on. That's part of your expenditure for your yearly trading. Then you can see your true profits. You just passed a 25k Aqua account in 3 days. That's a very quick pass. That's nicely done. Why don't you trade 6B of futures? Because it's the lot size, the contract size, it's just not big enough. You need a lot of pips, a lot of ticks to actually make the same as what you can make with NASDAQ. So it's one of the reasons why. Oh, you have a consistency rule. Okay. Well, consistency rules, sometimes the different firms have different consistency rules. They'll usually either have, like on futures, you have a consistency rule where you have to trade for 5 days and they have to be above $150 in profit. Some firms will have a minimum trading day rule, which means they want you to obviously trade for a minimum amount of days and be in profit. But you're talking about 15% total amount. Okay. Yeah, that is very annoying because it basically forces you to win. I think 15% is very, very low. And I think you're better off going with a challenge that perhaps is harder or one that is more expensive, because 15% is unbelievable. I wouldn't say that's great, to be honest. You haven't passed challenge yet, so 1% is good. You don't care if it takes 3 or 4 weeks. Yeah, that's an okay way to look at it, because you have to think about, do you want to lose that money on the challenge? Most likely not. So do you care if it takes you 3 weeks, 4 weeks, 5 weeks to get to the funder stage? Not really. If trading is not your full-time job, then it doesn't really matter how long you're on the challenge. If it's your full-time job and you need to get onto the funder stage, you need to make that income, then it is a bit different, and that's when people start to either panic and risk more, or they just risk more in general and pass quicker. Can I trade your system on the 5-minute time frame? I feel like you can trade a system on any time frame, but obviously the profitability will vary massively, because I trade on a 15 because 15 for me, it just works the best. Whereas I don't think the 5 minutes the best on GU. I'd say EU, the 5 minute is definitely the best time frame from what I've tested anyway. I haven't tested this strategy in the 5 minute on EU, but for other strategies I've tested, it has definitely been the best time frame for that pair. Are you currently in a trade? I am not in a trade at the moment. We haven't had any break of structure yet. We haven't had anything happen so far. 40% on Aqua. Yeah, 40% isn't as bad because you think you just will have to have 3 trading days, really. That's what you kind of have to think about it. So 50%, again, if it's 50% where they're allowing a little bit of, slippage, like with Top Step, you can pass in 2 days, but that doesn't mean you're going to get exactly 50% on 2 days. I had like 51% or 50.2%, something like that, and they still allowed me to pass. But CFD firms, it honestly wouldn't surprise me if you have to get exactly 50%, which will just force you to trade for 3 days instead of 2 days, which is quite annoying. But I guess they have to find a way to stop people from getting payouts. That's just how it is with prop firms. Looking pretty choppy today. Yes, it definitely is. Definitely is. We have a big news week, so this consolidation is probably going to continue today unless we get a nice break in either direction. Do you normally take your trades on a 15-minute, and how many trades do you think you take on average per week? We can just look at the weekly here. So you can see this week I had 2 trades. The next week I had 1 trade. The week after I had 3 trades. Week after that I had 4 trades. Remember, this is including those scale-in entries that I showed you. So it would include the buy to sell. So let's remove 2 from that. So you can see this week would have been 3 trades. This week would have been 2 trades. So it looks about an average of 2 trades per week so far on this challenge account. And yeah, they're all on a 15-minute time frame. I think it is the best time frame for the style that I want to trade, the amount of time I want to be on the charts, and the setup that I'm trading, basically. What is my win rate? Again, win rate doesn't matter because you can't say, oh, Will has a 50% win rate, so I need to aim for a 50% win rate, because I don't know your risk to reward, which obviously it works in combination with a win rate. You can't just have a high win rate, because you can have a 60% win rate or a 70% win rate and still lose money if you have a negative risk to reward, obviously. You can have a 20% win rate and be profitable. So win rate doesn't really matter as much as people think. The reason why I think people care a lot about win rate, especially beginners, is because they don't like having losing streaks, which is obviously understandable, and it's never good to lose trades, obviously. But I don't think that should be your main focus. Your focus should be improving your expected value, or your Kalmar ratio, your profit factor, all of these different stats, which will basically show you if your strategy is profitable. You still in phase 1? Well, this is only a 1-phase challenge, so there's not 2 phases. I'm only having to pass from 1 phase. So yeah. But if you think about it, I was up 8%, which for most firms would have been passed in phase 1. So now technically phase 2, I guess. But yeah, I don't get the luxury of a reset of drawdown. Do you ever consider algo trading alongside manual? Definitely, definitely. I think it is a good way of basically removing the human side of your trading, but it's also a lot more difficult than you probably think. It's very hard to explain exactly what you're seeing. You know, if you're thinking about when I'm saying the most recent high or low breaker structure, how do you determine the most recent? You would have to say, okay, the highest point in the last hour, but then it will use the point of this wick or the point of this wick here. Again, I'm not trading from wicks. Then you have to explain the bodies, and it just you just keep having to explain more and more and more and more and more. And obviously, the more that you have to make mechanical, the easier it is to make mistakes, and you don't want to make any mistakes really. But it's definitely something that I've tried to do before. I've created an algo for different strategies, but yeah, not for this main one here, not yet anyway. Perhaps later down the line I could just find someone to do it for me, a professional. New FTMO phase 1. I've actually done a full video on my second channel. So if you see here, my second channel, I have done a video, my thoughts on FTMO one-step challenge. So you guys can go check that out. I talk about basically my opinion on the one step and should you go for it, should you not go for it, and the positives and negatives of a one step basically, and their one step in particular, because there are one steps that are better than others. So you have to know exactly what you're purchasing. Just like a two-step is different from another two-step. Now, if we're looking at comparing one steps, wait for that to load. When price enters your entry zone, do you take risk entries or confirmation entries? I don't have a clue what you're on about, to be honest. If my entry's there, I'll take the trade if the trade's valid. I don't confuse my trading with different types of entries or different things like that. I have one type of entry. If price gets into the zone, the entry's valid, I'll enter the trade. Very, very simple. Here for your gold strat. I don't have a gold strategy, so you are in the wrong place, unfortunately. Which firm? I'm using E8 at the moment. E8 markets. Okay. So you see here, the difference in one steps can be massive. So you'll see that usually a one step will have a lower drawdown. So the drawdown is usually 3% and 6%, 3 and 4. Again here, you have a 5 and 10. If we just put this back to just one step. Okay, so 3, 6, 4, 6, 3, 4. So here, 4% overall max loss. I personally wouldn't go with that firm because I can quite easily lose 4 trades in a row. And I feel like most people can lose four in a row. So you don't really want to be trading with a firm that you know that you can just blow it in 4 days. You'd have to reduce your risk massively for this. But again, the positive of this would be you only have to make 5%, which is half of all of the other profit targets. So if you just put your risk in half, then it's the same. And if you do it based on drawdown versus the profit target, you see this, if you multiply it by 2. So let's say you've put everything in half, so your risk is in half and everything like this. You then have to make 10% for a 6% and an 8%, which would be higher than every other firm. So based on the drawdown versus profit target, this is the best ratio. Does that mean I go with the firm? It doesn't mean that, but that is definitely something that you have to look at. And if you're looking at the average one step here, it's usually about the same. 8 or 10% target with a 3% or 4% daily drawdown, which is obviously fine. But you also have to look at the drawdown type. So when you click into the challenge, if I just move my face, you can see the end of day trailing for this one. If we go back, trailing, static. So a static drawdown, in my opinion, is a lot better than a trailing, especially for the max loss. The daily drawdown is okay if it's trailing, because if I'm taking one trade in a day, it doesn't really matter. The only thing you have to be careful of is if you hold a trade overnight, then that can affect you if your daily drawdown is only 3%. It does make it more difficult in that situation. But you'll see a lot of these will probably be, some are static, some are trailing. So I would always say that static is the best. And the reason why is very simple. If this is the start point and this account you go up 5% and it's trailing, your drawdown goes from 10% up to 5%. So now this is your buffer instead of this being your buffer. So your drawdown has increased by 5%. So yeah. Whereas if you've got a normal challenge, you go up 5% at this point, your drawdown stays here at all times. So if, let's say you go down slightly, your drawdown isn't here anymore, it's obviously still all the way down here. Then you go up with more profit, now your buffer is even bigger. So that's the simple way of explaining static versus trailing. If you look back here, your drawdown's now here. If you go down, your drawdown's still here. If you go up again, your drawdown increases. That's basically how it works. So just understand that before you go over a challenge. And then, I hate the people that go for a challenge and they'll say, oh, the drawdown, I didn't realize it was trailing. Well, you probably shouldn't have been with that firm in the first place if you didn't fully understand the rules of actually trading with that firm. I have a few algorithms and EAs, risking 1%, done 6 to 7. Is that 6 to 7% what? A month, a year? What is what time period are you looking at? You'll probably just wait for New York. Yeah, London has been basically nothing at the moment. And obviously it is kind of expected when we have such a big week coming up with a lot of news. It's definitely expected. So you'll see on E8 I have it's a trailing drawdown or a dynamic drawdown. So as you see, my profits have gone up, so my drawdown's gone up. But if I could choose, I would always choose a static drawdown or a balance-based static drawdown, something like that. But you see here that the win rate is 40%, but we're very profitable overall because the average win is just shy of 4%, which is amazing. So if you look on the numbers here, the average win is 3 times the size of the average loss. There you go. 6-7% last month. That is that's good going. But the thing with an EA or an algo is it can have a few good months or 6 months of good trading, and then it can completely blow up. You need to have years and years and years of data, basically. Well, I would need that before I'd even consider putting my real money with it. Does trading 28 pairs mean more profits? That definitely is not the case. If that was the case, I'd be trading 28 different pairs. But usually the people that are trading more pairs are just confusing themselves. It can obviously work for some people. I know a lot of good traders that trade lots of pairs, but for most people, the more you trade, the worse it's going to be. Because, imagine I'm looking at GU. Okay, I'm looking, can price break structure? I also have to look on AUD USD and also USD CHF, and USD JPY, and GBP JPY, GBP AUD, gold, Euro USD. It can just confuse you, to be honest, which you don't really want. You do not want that. All you need is 1 or 2. Yeah, I think 1, 2, 3 is kind of the sweet spot. Some people don't like just trading one pair because they don't like how they're not in trades very often. But if you have other stuff going on in your life, then it doesn't really matter that much. But I know some people get super bored. They don't really want to wait 3-4 days for a trade, which I understand, but that's just trading. And if you can't accept that, then you probably shouldn't be trading in the first place. Which is probably the easiest way to put it. Mostly want an A+ setup. Exactly. But the issue is having an A+ setup and trading one pair, you're probably only going to get maybe 1 or 2 trades per week maximum. And that obviously means you have a lot of time of just sitting around doing nothing. If you're trading with prop firms, it is it's very annoying to spend a lot of time on a challenge. And obviously the fewer trades you take, the more time you are on a challenge account, the higher the risk you have to use to pass quicker. But I guess if the setup is an A+ or it's a high quality setup, then the likelihood of that actually winning is probably a lot higher. I see people just take random trades with increased risk. I would never increase risk on a random trade. It had to be a perfect setup to actually increase risk. That's why you still see me on these trades here. Some of these trades are still 1% risk because it's not that A+ setup. When I do risk more, I know that I have a higher chance of winning the trade. Obviously it didn't work in this situation here, but this was obviously you see minus 2.3, then plus 12k, let's say. That's a 10k profit. Is it better to size up or trade aggressively on challenge accounts? It depends. It depends a lot. Depends on the challenge. Are you allowed to size up? Are you allowed to pass quickly? Depends on your strategy. What's your average drawdown? If your average drawdown is 5% and you're risking 2%, you're just going to blow so many challenges, which you do not want. The more challenges you blow, the less profit you make. Yeah, it definitely does depend on your bankroll, because if you're failing 2, 3, 4 challenges per week, let's say, obviously that's an extreme example, but some people definitely do it, then you need to make a lot of profit to actually cover that. If you're getting an average payout of 20k, 10, 20k, then it's probably very profitable for you. But it'll get to the point where the firms are like, well, we don't actually want this guy trading with us. He's passing a lot of challenges and getting payouts, but he's also blowing a lot. And you'll notice with futures firms especially, they actually cap how many challenges you can buy. If you blow an account, you can only buy, I think, 2 or 3 challenges in a single day. So that obviously meant that it was getting to the point where people were purchasing more than 3 challenges per day after blowing them. Which in my opinion, that is just gambling at that point. I appreciate that. 3 years on the channel, that's very good. I've noticed that a lot of people that were watching me back in the day, they probably no longer trade. And obviously there's no way of knowing, looking at my subscribers, how many people still trade, how many people are still in the industry or not. Because I think people just stay subscribed to people they used to watch. And yeah. Do you still trade with FTMO? I probably will do this year. But right now I don't have any accounts with FTMO. Never taken a trade live. Well, there's no trades to take. I mean, that's just the reality of trading, to be honest. And if you want to see live trades every single day, then go watch somebody else. It's very simple. It's very simple. Top 3 prop firms in your opinion? I mean, you kind of have to go on the credibility of the firms, and the biggest firms in the industry at the moment, I'd say it's FTMO, E8, and probably Fivers. I don't know if it's 5% or Fivers, I'm not sure. Those are probably the top 3 based on how long they've been around, the size and everything like that. That's probably the top 3. And obviously everyone has different experiences of each firm. The experiences that I've had with firms will be different from the experiences that you've had, which makes it hard to say. Alpha Capital. Yeah, Alpha Capital, they haven't really been around as long as some of the other firms I mentioned. And as we know, firms can be around for 3-4 years and suddenly they're no longer around. So you definitely have to be careful. But yeah, Alpha Capital, I had some good trading with them last year. As you see, we had 1 payout, 2 payouts, 3 payouts, 4 payouts with Alpha Capital. And the good thing is I basically traded with every firm or every big firm, so I can kind of give my own experiences and my own thoughts on every firm. But a lot of these new firms I've basically never traded, which when people ask the opinion, it's a lot harder, obviously. Yeah, 10k account for $40 is very good, because you have to think about, okay, am I going to be able to trade in an account, a personal account with $40? Probably not. It's not going to be an enjoyable experience. If you just spend that $40 on a 10k account, you can learn to trade, you can learn to risk manage, and if you do pass successfully, then you are getting a funded account and then you can get a payout. But if you're just trying to trade with $40, it's pretty much pointless. Whereas purchasing a small prop firm challenge is probably a better bet for you. You started 4 years ago and now you are stuck. Please advise me. Well, you clearly have to do something different. If you've been trading 4 years and you're not profitable, then what you've been doing over those first 4 years probably isn't the right thing to be doing. You probably had to switch up the way you're learning, the strategy you're trading, because it clearly is not working for you. You don't want to keep doing something if it is not working, because by definition, you are insane at that point. All the prop firm competition has made it much easier for us traders to get payouts. I love it now compared to 3-4 years ago. I don't think it is as good as 3 years ago, in my opinion. I had my best time trading with prop firms 2022, 2023. It was, I would say, the gold rush of prop firm trading. The main reason is because the rules were very relaxed back then. There weren't really any rules, really. They would pay out any payout. I don't remember any rejected payout cases in 2022 in particular. So that was good fun. And you also have to think about the downsides. Obviously back then were, as you mentioned, it is easier now technically because we used to have minimum trading days and maximum trading days. So now people, they have the luxury basically of not having a cap on how long they can pass a challenge in. But back in the day, we had to pass in 30 days or we would lose the account. And with FTMO back in the day, if you traded for 30 days, you were in profit, you would get a free reset. So you'd basically start from zero again and you'd have to try and pass again within the 30-day period. If you weren't in profit and the 30 days was up, you then lose your account and lose your money. That was obviously more difficult than we have now because it's unlimited. You don't have to pass within a certain time period. Another downside to trading back then was the fact that there were 10 minimum trading days of FTMO for both stages. So for phase 1, you had to trade for 10 days. For phase 2, you had to trade for 10 days. And the first payout at the time, I think it was 30 days. Before they switched to bi-weekly, I think it was 30 days. Or even if it was bi-weekly, that means you had to trade for, or let's say you purchased the account today, the earliest point you can get a payout is in 34 days time. That's what it was like back in the day. So 10 days for phase 1, 10 days for phase 2, 14 days for your first payout, 34 days wait to get your first payout. And now I've had situations where I've had a payout within 14 days because I passed phase 1, passed phase 2, made profit, and then 14 days later I had a payout. So it saves a massive amount of time now, but you do have the downside of there are now risk rules, there are now consistency rules, and none of this was actually happening back then. So the passing and getting payouts was obviously easier, but there are lots of hidden rules now which make it more difficult. I don't remember ever having trading drawdowns back then. I don't remember ever having consistency rules. So the actual trading for the average trader probably is harder now. But because everything's so much cheaper, as you see on the screen, you can use code MATCH to get some huge discounts on your challenges. It also means that a lot of people are buying more challenges. The more challenges you buy, the more money the prop firms are making. And because they're cheaper, it means that they're probably having to reject more payouts. Do you use a trade copier? I do not use a trade copier at the moment. I personally think it is the easiest way of trading is to trade with one account at a time, especially for the average trader. Trying to manage multiple different accounts usually ends badly. The main reason it ends badly is simple, because every prop firm is going to use a different broker, a different server, which means that your conditions are going to differ from firm to firm. The reason this is so bad is because you might be tagged in on one account, but not the other account. You might hit stop loss on one account, but not the other account. So then all the balances are different, which will then make it very difficult to know the risk and the management that should actually happen on those accounts. Have you failed any challenges in recent times? I haven't taken a challenge in. This is the first challenge I've taken in a while, to be honest. First in a while. And yeah. First one this year as well. Risk per trade. I'm using basically 1% risk per trade overall. The reason why 1% is usually the best is because based on an average drawdown, I'm not likely to exceed the overall max drawdown for a prop firm. And I want to give myself the best chance of passing. So you need to use a risk per trade that means that it's not likely you're going to fail. Whereas obviously there's still a chance you can fail, but it's a lower chance. Whereas let's say your average drawdown is 8%, then using 2% risk, it's just not really going to end well, in my opinion. Thinking of getting a job whilst trading, is that a good idea? Of course that's a good idea. It's the best idea actually, because it removes a lot of pressure. The downside to trading is there's a lot of financial pressure on your trading. You have to make money if it's your only income to put food on the table, which is it's difficult. Because if you have a job that pays all your expenses and perhaps gives you enough money spare afterwards to save some that can then be used towards, let's say, prop firms or scaling a personal account, then that would definitely help. Risk to reward, 1 to 3 risk to reward always. Have you looked into futures prop firms? Of course. Of course. Best time to trade GU? I would say for me, I want to trade in the morning and then be done for the day. So London session is the best for me. But London and New York both usually have some nice volatility for GU. For most people, New York is probably a better time to trade. Especially around the world, New York's probably, the best. Best prop firm as a first time challenge. If it's your first ever challenge, I would say go with a prop firm that gives you the highest likelihood of being paid out. Because you don't want to go through the whole process of phase 1, phase 2, then going through on the funded account, sticking to all the rules, you make profit, and then you don't get paid. You don't want that situation. That would be the worst situation. And if you actually get paid out, you're going to be loving prop firms. You're going to be confident. You're going to want to scale with them in the future. If you don't get paid out and your payout gets rejected, for example, because you've cheaped out on a firm that isn't a good firm, then you're going to probably hate prop firms. You're going to think it's a waste of time, a waste of money, they're a scam and everything like that. So it's okay spending a little bit more to get used to the process and to actually get paid, of course. You reckon it's okay to trade 0.5% risk if you're at minus 8%? It really does depend, because if you've been risking 1% up till now and you've lost 8 trades in a row, what is your max drawdown? You know, with your strategy, how many trades can you expect to lose in a row? If that's 11, then it doesn't matter, because you'll probably hit the max drawdown, even if you scale down your risk. You have to know your strategy, your stats, basically. Because I don't know your data, I don't know your strategy, so it's hard for me to say. A long way back with that risk. Yeah, but I know a lot of people that have traded out of large drawdowns and then got payouts. You can see that someone just in the mentorship just posted, not huge by any means, however, after being 6% down since the start of the year, to get out of it on all my funded accounts and receive some payouts is great. See, look, you can be down 6% and you can still get multiple payouts. Very, very nice. Mentorship member doing well as usual. It just shows that it's never over. It is never over. You know, if you look at my challenge here, I was down 6%. Down 6%, and a lot of people give up. They're like, oh, I'm down 6%, 7%. I'm just going to just trade recklessly now. No, that is not the way to do it. Next trade, again, nice little 1% win. Then we had a beautiful win. Then another beautiful win. Okay, little loss, okay. Another beautiful win. Again, it's never over. If I thought it was over down here and I just traded recklessly, because I've got 4% drawdown left, I'm just going to trade recklessly, then I probably wouldn't have been in 7% profit right now. Yeah, I'm using Oanda charts right now because of that. But in my opinion, it is probably best for a lot of people to just, if you're not using a really complex strategy, or you don't need any indicators or anything like that, you should probably just do your analysis on MetaTrader, to be honest. Because on MetaTrader, you know, unless you're trading on TradingView, MetaTrader will give you, or let's say your trading platform, it doesn't have to be MetaTrader, for example, but you're seeing the exact price that you're going to be entering at. There's going to be a slight difference, you know, a small discrepancy between different brokers. You know, if I do this, when you get up forex.com, you'll see that it's very rarely that these prices are exactly the same. You know, it's 80, 82, 81, 82. Okay, now they're identical, but there will be a slight difference all the time. You see the difference in the prices. There will be a slight difference. It might not seem massive, but you have to remember that 0.1 pip, 0.5 pips adds up over time. And if your entries are slightly off every single time, then it will add up. So if you go on here, and let's say you're looking to enter from a retest of this level here, that level might be slightly different. You see on TradingView it's 102. On here it's 100. So again, you can see the difference immediately. Obviously that's not a massive difference. It's not going to affect you hugely, but it's definitely something to consider. A good risk to reward helps ease up the losses. 100%. People need to realize that risk to reward really does matter. It really does matter, because if you're winning big, then it eats up a lot of losses. You know, one trade I had profit was 6%. That eats up all 6% of that drawdown. One trade, all the drawdown's gone. And that's what trading's about. It's not about how many times you win. It's about how big your winners are when you do win. That's what's key. Winning big. That doesn't mean you should just go on and go for those home run trades when you're intraday trading, but having big wins definitely does help, I must say. Any bias for today? We haven't really done anything really. As you can see from the charts, it's just been consolidation ever since we opened last night. We've just had consolidation like this. You know, we go down, then we go up, fill the gap, test the high, go down, test the low, go up, test the high, go down, test the low, might go up, test the high. You know, this is just textbook consolidation. So trying to trade in the midst of this consolidation is probably a mistake. Wednesday NFP. Yeah, NFP is on Wednesday, which definitely going to spice things up. We'll have a lot of news this week. A lot. Do you move stop loss to break even? Never. Never. That's why you'll never see me have like break even trades. I guess break even trades can be small losses or small wins as well. I just don't do it. Do I use currency futures for chart analysis? If I was trading the currency futures, yes, but if I'm trading the CFDs, then there'll be no reason to do so. Euro USD. Yeah, Euro USD is absolutely skyrocketing. But GU we are not skyrocketing. Hence the lack of action today. Any exciting videos coming to the Discord? Well, I was actually in the process of filming. I want to film backtesting and also scaling backtesting because I have a scaling plan that works quite well. So I was thinking of doing a backtesting for that because, you know, just backtesting normal strategy is one thing, but trying to maximize your profits on every single trade is another thing which I think is key. So that will be coming soon, hopefully. What do I think about GU? I think it is very boring at the moment. Very, very boring. And guys, if you are not subscribed, make sure you are subscribing right now to the channel. Make sure you're subscribing. You know, you can see we're at 90,158 subscribers. I want to get to 100k, so be sure to subscribe if you're not already. If we scale our capital to millions, does our retail edge work there? I mean, the only realistic way that the majority of people can scale to millions is with prop firms. So it will definitely work. The only downside is I actually had it once with a prop firm trading with a 200k account where I wasn't able to get my orders in the market. I was looking to trade 20 lots, which for me is 1% risk. You know, 10 pip stop loss, 20 lots is a $2,000 risk per trade, which is 1% risk, which is very normal for a prop firm. And I don't think 10 pips is very extreme either for a stop loss size. And I was trying to enter the trades, and it actually got to the point where I was having to enter 5 lots 4 times to get in with my full size. This was very annoying because, as you can see from price movement, if I'm having to enter 5 lots and then wait in another 5 lots, price fluctuates, especially if you're in an entry zone. It's usually fairly high volatility. So when this was happening, I was not getting the entries I wanted. And obviously, if you're entering multiple different places, your average for that trade is getting worse in some cases. And this was not good. That's because there was basically no liquidity. You can see if you go onto a chart, if we can get it up here. It doesn't seem to show the size. No, I did not mean to do that. But if you go onto, let's say, C-Trader or something, you will be able to see the size of all of the orders. And what I was actually seeing was, let's say I was looking to sell here, I would actually have to sell at a very different price because there were no orders to actually fulfill or no liquidity to fill my orders. So I wouldn't be able to enter 20 lots, which is, again, terrible. If I'm looking to sell from this level here, but then it only can fulfill 5 lots at this price, and then price drops to take profit, and I want to be in 20 lots, yeah, it's not great. But obviously if I was only trading 5 lots, then it would have been fine. But that was only with one prop firm, so I haven't had that overall, but that was because obviously the higher size account I'm getting, but it was only 200k, so it doesn't really make sense to me. Why would I say the limit entries would be better than market entries? A lot of people say wait for confirmation, and limit entries is like catching a falling knife. Okay, so the reason why I think limit entries are the best, it's very simple. Let's say I was entering on this wick here, right? Let's say when price is coming up to this wick, this is a very, very bullish push, right? And if I was getting to this point, what possible confirmation could there be for me to get into this trade? The only way people get confirmation usually is by lowering the time frame or waiting for a candle closure. But with candle closure is all the way down here, I then missed out by, let's say, 5 pips. So I don't want to do that. If my entry point says it's here, then I will get in at this point. And setting a limit means that no matter what this candle looks like, I'm in the trade. This could obviously just rally straight through. That is obviously a situation. But I've seen it more times than not that most people, when they are not setting limits and they're just getting in the trades for no reason, or perhaps they have fear of entry, is because they'll have that entry point here. They'll see this massive bullish candle. And obviously when I say massive, I mean around 10 pips, which is fairly big for a 15-minute candle on GU. They'll see it pushing up towards their entry, and they'll be scared to get into the trade. Then they'll see price rejecting their entry, and it rejects, okay, it closes, now I'm going to get into the trade. Okay, now you've lost an extra 5 pips. Now if you have the same stop loss, which is where it should have been, the stop loss is now 15 pips, or 1.5%, instead of 10, which is 1%. So with an entry, it removes all human error. There's no possible error I can make unless I obviously put my entry in the wrong place. So that is it basically. And I think, yeah, limits, it makes trading so much easier. I can never miss an entry because I'm not on the charts or I don't click quick enough. I know that I'm going to be entered at basically that exact price. Whereas when you are trying to execute, if you go here and go new order, this is obviously always moving. So, if you type this in, you go to click, okay, now you've missed out on however many pips from your entry, which I do not want in my trading. How do I choose what pairs to trade at a particular session? Well, you have to think about what session you're trading. If I'm trading the London session, I want to trade a pound pair. Mainly because there's some volatility, which is good. if I was trading a yen pair, then perhaps I might trade it overnight in Tokyo session. If I'm trading a USD pair, I might trade it in New York session. But obviously GBP USD, we have pound and we have dollar. So you can basically trade it in either session. But then you have to think about, okay, when do I want to trade? Okay, I want to trade when I can trade in the morning and have the rest of the day to do whatever I want. I don't want to have to think about, okay, I'm going to trade all day. I've got to trade. I can't do anything because I just have to be on the charts and not miss a setup. It can be very stressful. So I wanted to make it so that I can do my analysis, do my trading, and then be done for the day. Very simple. Do I think GU will go up or down today? I mean, I don't have a crystal ball, unfortunately. Nothing in my analysis has said up or down. We're just in consolidation. And where we are in consolidation, it's not a good idea to try and predict. It's never really a good idea to predict what price is going to do. We just have to react based on what we're given. And right now, we haven't really been given a lot, to be honest. Yes, I exclusively trade GBP USD. Now this is an XAU USD. Again, it's the same as GU. We're just in consolidation. And if you look here, this is just consolidating. If we break out the consolidation, then it's a different picture. Someone said about the 4 hour on GU, I'm guessing you're talking about. Yeah, again, there's not really much going on, to be honest. We're just, yeah, not really doing anything. We obviously had that gap. We filled the gap, and then, yeah, not really much for me to go on, to be honest. And when the markets are like this, it's very annoying. So what I would usually do in this situation, obviously fail to break the low here, is I just go add an alert. Then you can change the message. So GU breaking low, and then you create. So now let's say I go off the charts right now. I then pop up on my phone and say GU is breaking the low, which is great. Do I take into account and close trades before high impact news? I definitely do close before. You know, as you see here, we have high impact speech later. We have retail sales tomorrow. We then have NFP on Wednesday. We then have GDP on Thursday. And then we have CPI on Friday. So if I'm in any trades and any of these news events actually coming up, you know, relatively soon, then I will close the trade. And obviously, the closer it gets to a news event release, if we're talking like the minute or two before, the spread will increase massively, and you might get some price fluctuations, which is probably best to close, you know, 5-10 minutes before, just in case. And a lot of firms will have a rule, whether it's 5 minutes, 3 minutes, 2 minutes, where you can't close before or after the news, or even open a trade before or after the 2 minutes. Which definitely makes sense. Many people don't like it, but it makes sense. You're going to hop on New York? I don't trade New York, so no. No, no, no. Thanks for the answers. You're welcome. Do I do this full time? Yeah, I've been full time trading since 2020. Every Monday, do you trade in London session or wait for New York session? I only trade London session, so I never wait for New York. But Mondays are usually quite slow. You know, if I look back, you can see that okay, we have one trade on Monday. Yeah, in the last 4 weeks, we've only had 2 of those weeks where there have been Monday trades. Usually my trades are spread out through the week, basically. Yeah, I only trade between 8 and 12 in the morning. And that's obviously UK time because I live in England. How many years of backtested data is enough to be relevant? It doesn't really, like, you can't say, okay, 3 years and then you can claim it as profitable. It depends on sample size, really. If you're averaging 2 trades per year, then 6 trades over 3 years is probably not a big enough sample size. Whereas if you have a large enough sample size that you can see different market conditions, you can see how your strategy performs in consolidation, in trending markets, during elections and things like this, then it is a lot easier for you to understand whether it actually works full time or not. It's hard to say again with number of trades because the higher the time frame, the fewer trades. The lower the time frame, the more trades. So in 1 month of trading on the 5 minute or the 1 minute time frame, you probably get the same amount of trades as I would get in a year. So you kind of have to base it off the time frame you're trading, the style you're trading, and then to see the conditions that you traded through as well. Is one pair, one strategy, and one time frame the best way to go? I would say so, yeah. For most people, that is probably the best. Trying to confuse it by adding in multiple pairs, multiple time frames, multiple different entries, exits, it can just make it way too confusing. You want your trading to be simple, and by making it simple, you're going to cut down any of the excess. And the excess is the things that are making it complicated, which would be multiple different entries or different strategies or different time frames. You can obviously add things in later. If you've been profitable, like if I've been profitable for GU, then I know that I can just add another pair and it's not that difficult to do. But I don't want to, so I'm not going to. Need to use a backtesting software? Yeah, you definitely do need to use backtesting software. And I use FX Replay because it gives me all the stats I want. Why don't I trade 1 hour supply and demand on GU? Why don't I trade 1 hour supply and demand on USD ZAR? You know, it's a very, very silly question. Use FX Replay as well. Yeah, FX Replay is it's probably the best backtesting software. It's just very easy to use. It does actually feel like you're trading sometimes. The only downside is if you accidentally forget to enter a trade. You can't then add it in, I don't think, which is annoying. But I guess the benefit of that is people can't add or remove trades that say, I would have taken this or I wouldn't have taken that. So it does obviously make people more accountable. But sometimes I accidentally click another candle when I miss the entry. But obviously that wouldn't happen in real life. You can't just click and then a new 15-minute candle appears. That I would say is the only downside. I wish you could somehow override that, but I guess that would remove the accountability part of it anyway. You can replay back into the trade. Yeah, but once I don't think you can replay further. Love your content. I appreciate that. 15-minute just works best for me. I've never used Forex Tester, so I can't say, but I prefer FX Replay, to be honest. I've used various different backtesting softwares and platforms, but you know, when I first started trading, I was doing my backtesting on TradingView, just using the replay tool. So now being able to actually, you know, enter the trades on TradingView, it does it's basically what I'm used to. You know, and when you're used to something, it is a lot easier and it just feels more natural to do that. There's no point making unnecessary changes. You're in a swing buy, 35272. That's probably all the way down here. You're probably in some nice profits right now. Very nice. So that's to do with more trade frequency. Not necessarily. It's just I don't want to be in trades for hours and hours and hours and hours. Whereas on a 1 hour that can be the case. I just want to be, usually my trades are a few hours max. I'm not sure if I can actually see my average trade length here. Yeah, none of them really seem to be more than a few hours, you know. 6k win, 1 hour and 13 minutes. 6k win, another one, that was, you know, that was a few hours. 1k win, that was 40 minutes. Yeah, it does seem to be fairly short, and that's what I like, really. Yeah, the issue is a lot of analysis that people do is actually more difficult to execute on a trading platform like MetaTrader, you know, MT4, MT5. It's actually, I think analysis is the easiest on TradingView. If you're trying to do analysis on here, you know, you go to scroll and you have to, you know, everything's just more clunky and it's not very user friendly to do analysis. I say it's amazing for actual trading, obviously, but doing analysis is not the best. And obviously you can do your strategy tester stuff, whatever this is anyway. Why some losses 1k and some losses 2k? The reason being is because I have different quality setups. So I have A+ setups that I'm comfortable using more risk. Then I also have the normal, you know, A or B setup. And the difference being the A+ setup has a higher chance of winning. So for certain things in that setup, okay, that I know this one has a higher chance of winning, so I'm more comfortable risking more. I wouldn't risk 2% on every trade, or I wouldn't risk a higher amount than usual on every trade just for the sake of it, because that's quite silly. But I would only ever increase risk if you have the data to back it up. That is the most important thing. Yeah, literally just going this level here, or just going this level. Everything's just so much easier on TradingView, which makes it actually enjoyable. Yeah. On your live account, do you prefer executing on MetaTrader? I don't think the broker I use is even on TradingView. So you see all of these different brokers, but I don't think I use Admiral Markets, and I don't think they are even on here. So I wouldn't be able to trade them actually on TradingView. Obviously, if I could, then I would. But yeah, they're not on here, I don't think. But let's say you're trading with Oanda, then it would be perfect to trade and do your analysis on the same platform. If you can trade on TradingView, then you should. It just makes everything so easy. There's no delay between you switching. There's no price difference because you're seeing exactly the price that you're going to be trading. Just makes everything a lot easier. Why did you choose to trade NQ when you could trade 6B? Mainly just volatility, to be honest. Nasdaq has a higher volatility than 6B. Pound futures. Ava Trades is good, and they in Ireland. Let me see. Where are they? Eva Futures. 4.3. Yeah, well, I wouldn't usually just be staring at the charts, to be honest. It's only because I'm on live stream. I usually just have the charts on one of my monitors, and then I'm just doing other stuff on the other monitor. And I only usually stream for a couple of hours anyway. It's not like I'm streaming the whole session or anything like that. Forex is a good broker. Do you mean forex.com? I'm guessing that's what it's called. Yeah, this one here. Yeah, they seem to have good amount of stars. You got me into trading pre-COVID when I was around 15. How's it going so far? You just hit 1.15 million in futures funding. That's unbelievable. That's very good results. What firms are you even with to get 1.1 million in funding? That is it's pretty good. Does trading multiple pairs equate to profitability? No, it does not. I could trade 10 pairs and I could trade 2 pairs, and 2 might be more profitable. But I guess if all 10 were profitable, then it would be more profitable, obviously, overall. But the likelihood of that happening for the beginner traders is very slim. what firms do I recommend for 50k accounts? You know, if we're going on here, I recommend a 2-step, and we're going for a 50k. Let's see. So let's go on rating here. So you can see at the top, Fiverr's, FTMO, and yep, 10%, then 5%, 8%, then 5% is pretty good. 80% profit split, it's normal. 14 days, frequency payout, that's good. A static drawdown, that's good. So that's good so far. Then we're looking at, let's say, Fiverr's for that. Then we go on the offers, see if there's any Fiverr's. Okay, 5% off. We use code match, we get 5% off. And that's how I pick my accounts. I go on profit match, I look at the profit targets. Perhaps your profit split is your biggest concern. You can just filter by profit split and go, okay, I want one with 90%. Okay, these are the only ones with 90%. Great. Or perhaps you want one with the highest daily loss. So you go and filter it by daily loss, and you see that, okay, 5% is usually the highest. So you filter through and say, what things do I need in a prop firm, and what things what can I compromise on? If you can compromise on profit split or payout frequency, then you can just ignore these 2 columns. But you need to look at all the other columns. Obviously, the reputation is very key. You see the FTMO, Fiverr's, they're some of the top rated firms, and like I mentioned in the video earlier, that is for a reason, because they've been around for a very long time, so they've built up that reputation. And to basically have 5 stars is very impressive, especially with a static loss type. It's very good. 1 to 100 leverage. Yeah, I mean, it seems pretty good overall. If you get that 5% off with, as you see, someone just bought a 100k challenge and saved $27. So, you know, you can save yourself a bit of cash too. Which trade opportunities am I looking at? But we're just stuck in consolidation, unfortunately. This usually happens when we have a big push like this pre 8 a.m. It's very annoying. But like I said earlier in the stream, we're just having this consolidation. Gold's consolidating, GU's consolidating. I think EU is the only pair that's actually broken out of the consolidation. But it's always a bit risky buying at highs like this. I'd say it's the higher you buy, the higher the chance of losing. Obviously, that's not based on stats. That's just yeah. I keep trading realistic, definitely, because I feel like if I make content and say this is what trading is like, this is what trading is like, and it's not actually like that. It's not actually that, you know, flashy lifestyle, then people find out it's not that lifestyle. Why would they watch me? Because they can't take what I say to be true. Whereas if I say from the very start, this is what trading is actually like, this is what you can expect, then people are going to be like, oh, well, what he said is actually true. I did end up losing this many trades in a row, or I did end up feeling this when I was in that prop firm challenge. So it makes sense. So I'd always say the truth, no matter, you know, content that I make won't get as many views as content saying, oh, I just bought this new 500k car, or I'm trading from the beach in the Maldives. It obviously won't get as many views as me talking about backtesting, but you can't learn from people talking about trading from the beach, whereas you can learn from me talking about backtesting. So I'd rather people actually learn from the content rather than just flash lifestyle in front of you. Because I definitely know that when I started trading, there wasn't as much content as there is now. A lot of people were making that lifestyle content and just basically flexing. So it was very difficult to actually know what's legit and what's not. But right now, it's very easy to tell. Do people have the results they claim to make? If they don't, then do not believe what they're saying. I only make claims about prop firms and stuff because I can show you this. I can show you, okay, we've got 10K. That's good. Most people be happy with 10K in payouts. Oh, another 7, 4, all these payouts. 20K, 19K, 16K. People will be happy with one of those payouts. So the fact that I've done that over and over and over and over again over various years, I've had a payout every single year since 2021, which is when I obviously turned 18. And I can talk about prop firms and I give my experiences on prop firms because I've had those payouts. I've passed those challenges. I've had payouts with basically every firm I traded with. So I can give those experiences. And obviously, if I'm giving those experiences, then people are more likely to learn from it because it's coming from someone who's actually done it themselves. If the system is 100% mechanical, is the system? Usually, mechanical is the best. That's just a simple way of putting it. I don't believe trading with intuition is the best way to trade because let's say I wake up today, I'm feeling really positive, I want to follow my plan, great. If I wake up tomorrow and I'm feeling the complete opposite, it might not be a good situation. And intuition in trading is based on, firstly, how you're feeling. Also, your previous results might dictate future decisions. If you just come off a losing streak, you've just lost 5 trades in a row last week, you might be in a different state of mind today than you would be if you just came off 5 winning trades. Whereas a mechanical strategy, it doesn't matter if you've lost 5 trades or won 5 trades in a row, you just trade the plan over and over again. You can't afford the luxury of digital journaling. You can use Google Sheets. Google Sheets is free, and you can create your different columns and do your journaling through that. Or like Francis said, you can just use pen and paper, just have a notepad or something like that, and just write down what happened each trading day and everything like that. The downside to that is you have to do the calculations yourself, so I hope you're good at maths. How do I manage my profits? Well, my profits, everything goes into a company. Then my accountant deals with that. But I invest a lot of money. Majority of my money is in investments. If you look at interest rates in the UK, there's no point saving with all of your money because you will just be losing because of inflation, and you do not want that. Whereas you look at, let's say, the Vanguard index funds, if you just invested at any point over the past few years, you'd be in profit. So it's probably a better bet than just keeping it in cash. I don't really spend much money, to be honest. The only money I've really spent that's substantial has probably been on watches or holidays or things like that, but I don't really buy expensive items. The way I look at things is it's very simple. Will this give me a return on investment? If it doesn't, then I won't buy it. That's very simple. Will buying a t-shirt, expensive t-shirt, give me a return on investment? Probably not a good return. So will I spend £500 on a t-shirt? Definitely not. If I spend £500 on a trip, then it's obviously a lot better. You're getting, especially with traders, you need to relax at some point. You need to get that refresh. And by doing a short trip, a weekend, obviously when you're not trading anyway, it's probably good for the mind. Lots of futures traders emerging now. The reason being, the challenges are cheaper. It is probably easier to pass because they're not really failing people like they do with CFD firms. The only downside to futures is they have consistency rules. So they have With Top Step in particular, that I obviously have experience with, you have to trade for 5 days with minimum $150 profit in those 5 days, which can be quite annoying. Whereas what I'm used to trading, I make one trade, I win that trade, I wait for the payout. You never got denied a payout? Yeah, that's good. That is a positive with futures. You do rarely see payout denials, which probably puts people in a they probably have more confidence trading with futures if that is the case. How long will it take to pass a prop firm account? I wish I knew. I wish I knew. Again, it just depends on various different factors. You lowered the risk because of the chop. Again, is that based on data? Does your data say lower risk because of this or because of this? That's what you need to think about. You got in at 995. It's not a bad entry. I brought 7 pips, 7, 8 pips. And guys, make sure you are subscribed. You can see we're currently at 90,171. Make sure you subscribe. I'm guarantee everybody in here is not subscribed. So make sure you now subscribe. Everybody go and subscribe. I want to get to 100k. If you guys have enjoyed any videos, enjoyed any live streams, just click subscribe so you don't miss any future episodes. Do I pay attention to any key levels? Previous week high or low? No, I do not. I do not. No key levels. If I was in your position, only made around 20k since September, would you bother with starting a personal account yet or investor profits? If you're profitable and maybe you've been making that profit from prop firms, for example, I don't know how you've made those profits. I guess you said with futures, right? Then if you have been making profits, then I don't really see the downside to putting a certain amount of that, percentage of that into a personal account to trade. But I know with futures, if you are trading with NASDAQ or something like that, then you will have a higher margin requirement, if I'm not mistaken. So I'm not sure the amount you have to have in your account to trade, but I'm pretty sure it's more than normal. But if you're profitable when you're making consistent profits, then it would be silly not to trade with a certain amount of that, obviously. I always say to traders, use your prop firm profits to fund your personal account. The people that are making profits of prop firms consistently, and they claim to be consistent traders, why not just put that into a personal account as well? Let's say you make 10k, you put $1,000, $2,000 of that 10k payout into a personal account, and if you do that every 10k payout, then it can grow substantially over the long term. Looks ready to sell. Yeah, but also still stuck in its consolidation, to be honest. Max trades per day. Normal trading, 1 trade per day. Yeah, I'm comfortable taking 2 losses per day. And the reason I'm comfortable doing that is because I know that I'm not trading every single day. If I'm trading an average of, let's say, 2 trades per week, 2 or 3 trades per week max, then I know that taking 1 trade per day, I can lose a max of 2% per week. And I know that 1 win wipes out that whole week of losing. Let's say I have one day that I lose slightly more. I lose, let's say 3% in a week, 4% in a week. It's still easy to wipe out. As long as it doesn't happen every single week, then that's completely fine. Yeah, nothing's really happening on GU, to be honest. So we're going to call it a day here. Make sure you guys are subscribed. Make sure you guys check out the Telegram group to see all the trades I'm taking. We've been doing very, very well in there recently. Yeah, subscribe to the channel. Hope you guys have a good trading day if you are continuing to trade into New York session and later into the day. But for me, there's just been nothing so far. We've just been consolidating, so it has been rather boring, unfortunately. But this week, like I said earlier in the stream, we have a lot of news, which will either mean we get very little movements before the news comes out, or we have a crazy week. It's one of those two things. I don't think it's going to be a normal week. I think it's either going to be elevated risk or elevated volatility, or it's going to be very, very slow building up to the news releases. So we will see what happens. But yeah, it was a good stream. I hope you guys enjoyed, and I'll catch you guys in the next stream, whenever that may be.